Good evening, Samit, Ashish. Good evening, all. Very nice to see
Evening,
you all
sir.
after a very long time. Hope your preparations are all good. Just few more days, right? All right, I'll start off. Time is 8 o'clock. We don't need to wait anybody else to join in. Okay. Fine, friends. Good evening, all. So next exam is SFM, and that is how I'm standing here in front of you or sitting here in front of you. Let's start off with first important rule. Your FR exam might be easy, might be tough. Okay, make one thing very clear in your mind. FR exam being easy does not mean it is going to be absolutely scoring from the exam perspective. At the same time, FR paper being tough also doesn't by any way inform you that you are not going to get good marks in the exam. What FR exam easy implies is that in that paper, if you are able to perform really well compared to the other people also writing the exam, definitely you will be getting a leading advantage. So don't carry forward the happiness of FR or the tension of FR to the next paper. Keep your mind neutral. That is rule number one. Very, very important rule, friends. Now we have to focus completely on SFM. FR, whatever has happened is over. It's historical cost. No more relevant for any future decision makings. All right. Now let the values do their job. You do your part as far as the next paper is concerned. Friends, as far as SFM is concerned, being the next paper, let's hope you get a good one. But what I more believe is that you get a tough paper and you be tougher than the paper because we have done a lot of hard work. We have covered concepts like no one else. We have covered a lot of questions. We have done a lot of SFM success series, which I believe many of you have attended. We have done a lot of hard work. All right. After doing this, if the paper comes easy, the valuer might not be in a position to differentiate between you and others. But if the paper comes a little tricky, okay, you will be there creating that niche, whereas others might not be able to do it, and that is where you will get a better advantage. So again, I'm going to repeat this thing to you, friends. Next paper being SFM, whether it be easy or tough, should not result in an emotional happy state of mind or an emotional sad state of mind. What is more important is be neutral, go and do your duty. You are meant to go write the exam. You are meant to go there and give in your best. Go and do that. Forget everything about the result. Result is not in your control. The only thing that comes in your control is the effort. All right. And next question. Exam is coming after 2 days. Does not mean you should sit and burn yourself. Study, sleep for 5 hours, 4 hours. Too much of hard work. Don't do all that, friends. This is more like a test cricket. You are having how many exams in total? 8, at least for those who are writing both the groups. Got it? If you're writing one group, you are having 4 exams and you have one leave after every exam. Am I right? So you have to endure yourself for 8 days minimum, or if you're writing both the groups, 16 days of endurance is required. What is more important is you stick on. If suppose you go and do extreme hard work, you study, you sleep too less, and you study too much of SFM today, you somehow go and write down and then you burn out. You are unable to focus and give your optimum for auditing. That will not make sense at all. You have to be consistent. You have to make sure that you are going at a stable pace rather than doing something too much and then too less. Another thing, SFM being a numerical paper, you need some good sleep so that your brain can process all the data. Do not think that these 2 days because you study, you'll score too much of marks. No, you are going to score good marks because you have put in a lot of hard work in the past. The last 2 days is only the finishing touch of whatever you have been doing for the previous 4 months, 5 months, 6 months, 1 year, whatever you have done it. All right. These final 2 days is only going to give you a push, but your marks are already determined by the effort that you have already invested for so much of time. And it's not only your effort, it is our effort. I have also worked along with you. We have done a lot of discussion, more like a combined study or a teaching form of discussion. Very, very important is that you have done that. So don't overstrain in the last minute. Make a good plan. Go with the strategy. So today, my first step that I am going to spend over here is to share with you a strategy as to how you are going to prepare for the exam. You need to make something similar to this. Maybe you can make it a little up or little down as per your convenience. Normally, I'll just share my plan, and I would hope that you will be also be able to stick on to something like this so that you can get better marks from the exam point of view. Just a moment, friends. I'm sharing my screen. Come on now, quickly unmute and tell me what are the subjects that is coming in SFM. Guys.
Mutual funds, mergers, acquisitions.
Yeah, mergers and acquisitions, very good.
Portfolio management.
Portfolio management.
Foreign exchange.
Then you have portfolio, then
Forex.
Then
Options, futures.
Okay, we'll call them all as derivatives.
Dividend policy.
Interest rate derivative. Then
mutual fund,
Then
Dividend.
capital budget.
okay, I'll call it a security valuation, which is nothing but dividend policy, risk analysis, and bond valuation. All right. Then
Theory, concepts, startups, all those.
come again.
Theory, concepts, startups.
Theory. Then we'll put it separately. Theory. Good. All right. Then that's it, right? Wait. That portfolio management we have told.
Bond valuation.
Which one?
Bond valuation.
Bond valuation will come under security valuation. Here you will have bonds, you will have dividend policy, and you will have risk analysis. Okay. Yes, I think we have covered all. Then we had portfolio after this. Portfolio followed by mutual funds, mutual fund followed by mergers. Yeah, then you have different types of capital budgeting. Am I right? Now, friends, you have so many chapters. You have to segregate these chapters into tricky ones and the easy ones. Tell me, which are the tricky ones in this?
Derivative.
Forex, derivatives.
Forex. Then I think mainly it is these two things, right? Correct. Now, today is what day? Today is Tuesday, right? All right. What you are supposed to do is keep this for Wednesday morning. After sleep, the moment you get up, invest a 3 hours time on this chapter. All right. Same way, derivatives, you keep it for Thursday morning. Why morning is because after getting a 6 to 7 hours of sleep, your brain is absolutely fresh. Your brain will process these data faster. All right. This you can give another 3 hours. That should be sufficient for these two chapters. All right. So now what happens is we are left with the remaining easy topics. So what are the easy topics that you can do today if you are having the energy? You can do mutual funds. All right. And you can do the security valuation. Keep these two topics for today. If you are tired, don't worry. You can do it tomorrow also. I'm just telling today because these are some easy topics. All right. Then what you have to do is this you have to do tomorrow after the morning session. Let's say you're getting up at 5 o'clock in the morning. After 8 o'clock or 8:30, you can do this as a 10 a.m. onwards. You can focus on this. And mergers you can focus tomorrow 3 p.m. onwards. Okay. If you do like this, what will happen is on the last day, you will be left with only one thing. That will be theory and different types of capital budgeting. All right. That will be like from, if you're talking about 3 hours for derivatives, this will be, let us say 6 a.m. to 9 a.m. This is covered. All right. So then what happens is you're left with only theory. Theory, you can cover it in 2 hours now. I have shared my PPT with all of you. I hope you have that. That's all short notes directly taken from the study material, friends. All right. Plus, this would not take you more than an hour to study. So if you keep this one plan intact, what would happen is I'll summarize the whole thing and just give it to you over here. Okay. Today is what day? Today is Tuesday. Tuesday, you do the two simple topics. One is security valuation. Plus, you do mutual funds. Wednesday, you start with IFM, Forex, followed by portfolio, followed by mergers. If suppose you're unable to cope up with security valuation mutual fund today, what you can do is you can keep the mutual fund for tomorrow. Tomorrow you will have time for it. So today you can only focus on security valuation. All right. Thursday morning, you start with derivatives, followed by different types of capital budgeting, CB, and this should be followed by the theory. So the advantage what you get is IFM and derivatives you do when your mind is absolutely fresh. Theory you're doing just before you enter the examination hall. So your brain is not numerically roasted up. It will be easy for you to actually quickly complete the entire thing and, go to the examination hall and start cracking problems also quickly. This will help you to score around 16 marks. All right. And these other areas, other than these two, will cover the major portion. That is security, portfolio, all these are, you will get predictable questions also. So you can easily score a good deal of marks over there. These two together will come for around 12 to 16 marks. That's a normal trend. Okay, every time they can change the trend. Normally it comes for 12 to 16 marks. All right. Yes. Are you all clear so far, friends? Can I go
Yes,
to the
sir.
next part now? Yeah. All right. I'll now go to the next part. So this is the plan. Now what I'm going to do is I'm going to spend some time sharing some important concepts in each of these chapters, which needs some emphasis and which may come as a tricky question in the upcoming exam. Okay. So we'll start with the first chapter, that is security valuation. If you want, please make notes. Okay. In this chapter, the key concepts that we can focus for the upcoming exam is, one is average duration. This along with volatility. That along with a concept called as convexity, friends. This one question had come in November 2020 exam. All right. So now it's November 22. So that's how I feel that this is a bit important. I have done this in the SFM tricky questions in my YouTube channel. In case you want to quickly revise it, it is available over there. Okay. Right. Let's quickly revise the concept also. For average duration, the concept goes like this. We are trying to find out in how many years you are able to cover up your entire money. So when you do average duration, we can do it in two parts, friends. One was the table method and the other one was the formula method. Does anyone remember the formula? You had written it down almost 20 times. 1 plus y divided by y minus 1 plus y plus n into c minus y divided by c into 1 plus y whole power n minus 1 plus y. Write down once, you will remember it. You will not forget in the examination hall for sure. All right. That's the formula for average duration. Or you can use a table format also. What's the table format? Here, cash flow, discount factor, discounted cash flow, weight, and then finally you will have what? You will have the weighted average duration. Okay. Based on this, we had gone to learn about the volatility. Volatility, the formula was duration divided by 1 plus yield. You would get your answer in percentage. So let us say you're getting the answer as 2%. What that means is that for every 1% change in the yield, the price is going to change by how much percentage? 2%. But is that absolutely accurate? No, it is not absolutely accurate. It's only an approximate answer. That is where we come to the next concept called as the convexity. So what we exactly do in this convexity is that we try finding out how much is the deviation from this one. So when the volatility graph, if it goes like this, the convexity graph actually goes like this. All right. So for this, there's only one question in the entire study material. Not in the material, it's in the examination. It had come in November 2020. So just work out that one question. They have got a formula over there of 2V1, 2V0 minus V plus V minus. If I tell like that, you might find it confusing. Better just crack that one question. With that numbers, I have also given you the logic. So that is the important part, according to me, from this chapter of bond valuation. Are you all clear, friends?
Yes.
Okay. If you have any doubts, let me know. Okay. Yeah. All right. After this, we go to the chapter of dividend policy. In the chapter of dividend policy, the crucial area from exam point of view is the buyback. All right. The market price per share after buyback is post merger MPS will be equal to market value after buyback divided by number of shares after buyback. All right. And on this, we have done one question in class. That one question has come in the November 22 RTP also. One person was having some surplus funds of 90 lakhs. From that 90 lakhs, he was planning to distribute 30% of the surplus funds he wanted to distribute. Do you remember that question? He wanted a post-market cap as some 200 lakhs was the post-market capitalization that he was requiring, etc., etc. All right. Just note it down, friends. Then I'll go to the next part. Yes. I will now go to the next one. So dividend policy done, and we are also done with bond valuation. Next area that we need to discuss on is this chapter called as portfolio management. In this chapter, there are a few crucial areas to focus on. One is beta. Many times they test on beta because practically for business valuations, betas are used. Do you remember the formula for beta, friends? Formula number 1, sigma xm minus n into x bar m bar divided by sigma m square minus n into m bar the whole square. What is formula 2? Come on, tell me.
Standard deviation x, standard deviation m into correlation. Achha, this formula.
Which one come again?
The third one, sir.
Third one. Can you tell the third one?
Standard deviation x divided by standard deviation m into correlation x.
Wonderful. All right. 3 formulas, and we had the fourth one also, that is change in security return divided by change in the market return. All right. One moment, please. Change in the market return. So this can be used only when you are having 2 outcomes. And what is the logic of the word beta? For every 1% change in the market, what is the change that is going to happen in the security? Everybody clear? Correct? Okay. So that one formula and that one concept is very, very crucial. Second crucial concept in CAPM is, in portfolio management is CAPM. A very simple formula, RF plus beta into
RM minus
RM minus
RM minus RF. All right. This formula, this way or that way, they will ask you. For example, this is the same formula which we use for finding out KE also. So because it's a formula which has got a Nobel Prize. So any formula which gets a Nobel Prize will have importance as far as the exams are concerned. Third important concept over here is the concept of proxy beta. Do you remember the 4 steps involved in proxy beta? Yeah. First, we were trying to find out the beta equity of, I think, MT Educare. If I'm not wrong, that's what I must have done in your class also. Beta overall of MT Educare. Since it's the same risk, that will be the beta overall of CAPS. From that, we can go and find out the beta equity of CAPS. Am I right? Okay. That's how we work out the whole proxy beta concept. Third important concept from portfolio management. Fourth important concept that comes over here is the new formula for covariance. We had done a beautiful question towards the end. In that question, we had 3 securities, A, B, C. The weights were around 1/3, 1/3, 1/3. Do you remember? That question is crucial. Why? Because in that question, multiple concepts are coming in. One was new formula for covariance. We used beta formula 3, correct? Then what did we do? We did systematic risk and unsystematic risk, right? And after that, we found out the combined risk using both Markowitz method and matrix method, correct? So one question which covers, and then the overall beta. This one question covers a lot of concepts, and so mark it as crucial and do these questions first. So you get the important areas being covered up earlier than the other ones. All right. Then after this, the next important area in portfolio management that I understand is short selling. We had a question which came in May 22 RTP. I have done that in class already, friends. I hope you remember that. Question number 1. Okay, what is the meaning of short selling? You sell first and you buy it later. So for that, there is a scheme that is there in the stock market, which is called as the stock lending scheme. As per the scheme, there is a person who is borrowing, who is lending his share. One other fellow who is borrowing the share. The lending fellow will get some lending charges. That is going to be his income. All right. Apart from that, he is also entitled to the dividend. Maybe I'll draw a picture and show you. Okay. Let's assume Ashish and I will take Swapna. All right. So what will Swapna do is Swapna will lend her shares to Ashish. So once she will do the lending of the share, she will be getting lending charges. That is going to be her income. Okay. Apart from this, Swapna is entitled to dividend from the company. Okay. That is one of the schemes of the stock lending scheme. So even though the share is taken by Ashish and sold to somebody, she is still entitled to the dividend. All right. Subsequently, Ashish, what will he get? He will get the gain or loss on short selling. That is going to be his main agenda from the whole short selling scenario. Everybody clear? I'll give you a minute. If you want, you can write it down just to revise this concept. Yes, friends. So I believe you are done. So these are the crucial core, and one more concept in portfolio which is important: sharp index model. Okay, we have done a question on this also in class. What this says is that total variance will consist of two parts. One is diversifiable variance and the other one is non-diversifiable variance. Non-diversifiable variance will be happening on an overall basis, whereas diversifiable variance will be happening on individual basis. If you have A, B, C, we will take diversifiable risk of A into weight of A, the whole square. Same way for B and same way for C, and then we will take the total. All right. So this being a very long chapter, friends, we have these many important concepts. Just note it down once again if you have not done. Starting with beta, CAPM, proxy beta, beta, CAPM, proxy beta, covariance, and then finally you have this short selling. Sorry, short selling and sharp index model. All right, friends? Yes. Can I go to the next chapter? Okay. Next one is mutual funds. In mutual funds, there are all concepts are very easy. You can learn all the concepts. Important ones, according to me, is one, we had this question on dividend plan, bonus plan, growth plan. Do you remember? For this question, friends, they have a reverse working question coming in November 2020. Okay, that is tricky. And if they want to torture, they can bring back the same question again. November 2020, dividend plan, bonus plan, growth plan. We had done the answer. They are doing a backward working to get the question. So that is one tricky question. Second one is about that constant ratio plan. There was a question that we have done in our class with the name of Sunidhi. I hope you remember, correct? Okay, that question is another tricky, important question. And the third one, which was there in the old syllabus, then removed from the new and then again brought back, which is called as constant proportion portfolio insurance policy. This, when I did your regular class, I didn't cover it. Then subsequently, I came and mentioned it that I have done it in the SFM success series tricky questions. All right. So if by chance you missed that part, just cover it. It's a hardly 10-minute question. You can just go through it once and you will be getting the concept of this one. I had informed at that time itself in the WhatsApp group also. I believe you have already attended it. Okay. Yes. So these are the three crucial areas from mutual funds chapter. And yes, one more. Sorry, friends, I'm giving all the important areas. The dividend equalization. Dividend equalization question. That also we have already done. So give importance to these four areas. Remaining of areas are also important, but if they want to really put some tough questions, these are the four areas where they will target. I'm not going into the concept because already I have covered it for all of you friends. I don't want to waste your time now since exams are nearing. All right. Yes. So these are the areas to look for in mutual funds. Can I go to the next one now? Okay. Yes. So after this, the next one that we are looking at is after mutual funds. What is the next chapter here? Mergers and acquisitions. Here, The crucial areas is point number 1. We have done a question on mark mask. That one question covers almost all permutation combinations, friends. Just do that one question. Second one is the free cash flow method. We have done a business valuation question. That is the second area, and the third one is free cash flow to equity. These three questions are crucial, and one more, AFC, BCD. Yes. These 4 questions. All right, friends. I'll go to the next one now. So after mergers, the next chapter is international finance, right? IFM. Okay, this is a very long chapter, but from exam point of view, don't pressurize too much on this. Okay. Once you're strong with the concepts, exam wise, it should be clear. Focus on cross rates. That is one tricky area. Second one is cancellation of forward contract. Okay, here we have done 2 questions. We have done a very big deadly question. I don't know if you remember it. We have done a question, friends. In that question, FEDI rules was there. I had told you 15 days. It's the gap is around 15 days. They have made an amendment over there. Now the 15 days has come down to 3 days. So just note down that has come after your classes got over. The FEDI rules, the 15 days gap has been shifted to 3 days. It won't affect your exam paper as such. Just that earlier, if the person comes after 15 days, he will be blacklisted. Now, if he is coming after 3 days, he will be blacklisted. Okay. And then there was a question on early cancellation also, which we did from the study material. Illustration number 4, I think. Do you remember? We have done one question from the study material, early cancellation. These 2 areas. And the last area that you have to see over here is, we had done a question on currency option, money market hedging question. We had done one, 364,897. Another crucial question for the upcoming exam. Okay. Can I go to the next part, friends? Okay. Yes. So once you're done with IFM, the next chapter we have to look on is futures. Futures, we have to look at EMA, exponential moving average, we have done. And there was one important question that we had done. What was the name of that question? Where you learn about the perfect hedging. The concept that we learned over here is S0 into beta into 100%, right? And there was one more formula. Current beta, desired beta, reduction in the beta, multiplied by the spot market. That one question we had done, I had mentioned that as ODBE. One question was there. These 2 areas you give high priority in the chapters of futures. All right, friends, can I go to the next one now? Okay. So after futures, the next one is options. Options, friends, the final 3 models, that is the risk neutral model, binomial. Black shows they have not asked for the last 10 to 15 years, friends. I don't know why they are not asking. They should ask very, very soon. But this I have been telling from the last 3 years in all my classes. They will ask this time. They still don't ask. So I'm not sure it will come or it will not come. But 15 years, if they haven't asked for black shows, means something is seriously wrong. Or they should remove it from the syllabus. Or if they are keeping, they should ask a question at least once, right? So mark it until it comes once. You please be ready with that. Anyways, you have done your homework. You have written down the formula 20 times. Do you remember the formula, friends? Anyone?
S0 into ND1 minus E into ND2.
E raised to minus RT into
ND2.
ND2. Then in D1 is equal to
log of S0 by E plus R minus standard deviation.
R plus
0.56 standard deviation square into T divided by standard deviation root T.
Wonderful. D2.
This is D1 minus
D1 minus.
T.
Brilliant, Ashish. Brilliant. Keep it up. Okay. What about binomial model? Others, once you read it, the moment you read it, it will flash. You will not forget. That's for sure. You have done that homework earlier. What about binomial?
That is CU into UIUD,
IDUD
IDUD.
plus CD into
UIUD.
UIUD whole divided by I.
I.
All right. Great, great, great. All right. Risk neutral, we were going by 2 steps. First in the spot market, then in the option market. That P1 minus P formula, etc. we were using in that case. All right. Please mark this, friends. Okay. Next, we go to the chapter of interest rate derivatives. Okay. Friends, this is one chapter where I cannot tell you what is important, what is not important. This chapter, every question is a beautiful variety. Every question. If you talk about interest rate swap, we have done 4 questions in class. All 4 are variety questions that has come in the exam. All right. We have done FRA, 2 or 3 types questions. All those are examination questions. This one chapter, you do it full. Don't filter out anyone, because every question is unique. Every question is interesting, but they are not testing too much on these areas. As I told you, IFM plus derivatives together, the marks that normally comes in the exam is around 12. But you know, in the upcoming, it can become 5 also, it can become 20 also. I'm not saying it will be definitely 12, but at least that is the range that we are seeing in the past. So don't spend too much energy on this. Spend more energy on the initial chapters that we are discussing. All right, friends? Okay. Yes. So once we are done with this, then the next thing what we are having is different types of capital budgeting. Here you focus on bond refunding. Okay. And one question that we had done in the class, which was a combination. I forgot that African Rand, one question we have done, right? 6 Rand per rupee. That question. All right. These 2 are the crucial ones. All right, friends. I believe you are done noting it down. I'm not taking much of your time now. I will have an interactive session, friends. You have any other doubts or any other areas you want me to cover for you now? I am open for discussion, so we can discuss those areas and we can pack up, or you can start studying. I don't want to take more time giving lectures, because it's the right time for you to sit and study and complete your part. Okay. So if you want, sir, can you please revise this particular concept? It will be helpful for us. Tell me, I will do it right away now.
Sir, just please explain about the EMA, exponential moving average.
Yes, sure. I'll explain to you. Okay, EMA is a concept which I'll just show you here. You know, once I take money control, I think the last class I completely showed it over here. EMA is an average. So if I take a particular stock, let's say for example, I'm taking Infosys. All right. In the Infosys, if you come down, they will be having moving averages. So when you see the moving averages, you can see 2 things over here. One is SMA. If I come down, you get EMA. So do you see the EMA as 5 days, 1538, 1518, etc., etc.? Hold on 1 minute. All right. This numbers that you are getting over here is what you call it as an exponential moving average. What is the purpose or why we do exponential moving average also, I will tell you. I'll tell you how I learned about this. In fact, I used to do this EMA myself earlier when I was studying. What I used to do was I used to write down the date. So for example, now we are in October or we are in November. 1st October 2022. How many hours I studied? I studied for 10 hours. 2nd October, I studied for, let us say, 8 hours. Now tell me, what is my average? First day was 10, second day it becomes 9. 3rd October, I start studying for 12 hours. Now what is my average again? 10. 4th October, I start studying for, let us say, only 5 hours. So now what happened? My average suddenly falls down. I think it will be 35 divided by 4. That should be around 9 point something. All right. So this is what we call it as SMA, or this is a simple moving average. As the days go on, okay, my averages keep on changing. Exponential moving average will give you the long-term trend. it gives you a real long-term trend, which means in an EMA graph, okay, the share will show you either a long-term up or it will show you a long-term down. All right. So ideally, what the investors do is many people invest based on EMA. The moment the graph shows a little up in EMA, you are supposed to buy. That means definitely the price is going to go up in the long run. But if the price is showing a slight down fluctuation in EMA, you are supposed to sell. That is the logic of EMA. The formula for EMA is what they do is they'll take the previous day price. Better to show you a question. I'll open my material. All right, wait here. Sorry, I took the wrong material. I should have taken futures. Okay. See, when you look at these numbers over here, previous day value is turning out to be 14,522. EMA for the previous day is 15,000. How much is the deviation? 478. I will not take the whole deviation. I will multiply this deviation with 0.062. Okay. So like that, I get the deviation as how much? 30. This I will reduce from 15,000. Next day, my EMA will be 14,970. Sensex is 14,925. Deviation is 45. This again I multiply with 0.062. Now, friends, how I got 0.062, I'll tell you. It's actually a 31 day. So there's a formula for that. I'll explain the formula to you now. The formula is 2 divided by n plus 1. So in our case, it will be 2 divided by 31 plus 1. That is equal to 2 divided by 32. So let's just do it and see. You will get the answer as 0.062. And that is the same EMA question they have used over here. Remaining is copy paste. So you just have to read through this table once and you will understand the logic of EMA once again. All right. Yes, friends. Tell me, any other doubts you are having or any other areas you want me to cover? Please let me know. Ashok Kondaya, I think you are muted. Are you speaking or?
Not speaking, sir.
Not speaking, is it? Okay. Yes, friends, any other doubts or I will not take much of your time. Now, these days are very precious.
Sir, whether we have to focus on value at risk now?
We have to focus on value at risk is one of the concepts that you have to learn. Okay. See, you have to learn the entire thing. I only focused on the important areas, whatever I have showed you. All right. That way, you are having 2 more topics which you can focus on in the chapter of security analysis. One is value at risk, and the other one is one useless question was there, hypothesis. One run test question was there, 2n1 n2 divided by n1 plus n2. So I had done that with the whole logic I have given you. Those 2 questions also you can mark it as important questions. Okay. Yes. Any other area, friends, that you want me to discuss?
Sir, can you repeat that value at risk and one more question?
Yes. I will show you. Value at risk, I'll explain to you. Maybe one day it's before the exam, it's a too less time to explain, but I will explain. I'll just share my screen one moment. See, there's a chapter called as security analysis. Okay. This is actually a theory chapter. Inside this chapter, they are having 2 topics which are good ones. One is VAR, value at risk, and the other one is run test. All right. VAR, there is again a question which has come in November 2020. All right. A question where this fellow was having somewhere around 4 lakh rupees in bank and he wanted to keep a minimum balance of around 1,000 rupees. So he had some 3,99,000 to invest. All right. That one question you work it out. VAR, basically the logic is how much is the maximum loss that you can take, you can make in one day. How much is the possible maximum loss that you can make with a 99% confidence? So for this, you should use the normal distribution curve. Here you'll get a value of plus 0.49 from the Z value table that will correspond to 2.33. We have done this completely in class. I hope you remember doing this.
Yes, sir.
Yeah. All right. And second one is a run test. Run test is a useless question in your study material, a harassment question. But I have given you logic even for that question when we did it in the class. We have covered everything logically, friends. I'll just take it and show you. Study material, final, SFM. We'll discuss this question also if you are. See, this was the question, all right? So the price is falling down, we'll take it as a minus value. Going up, plus value. Going up, plus. Falling down, minus. Going up, plus. Like that, after you do this, we got the number of changes in the sign. See, they have taken it. Going down, minus. Going up, plus. By doing so, we got the number of plus change as 11, minus change as 8, and the number of sign changes as 8 over here. Number of sign changes means my 0 to minus 1. Again, here change 2. Here again, there is a change 3. Again, there is a change 4. Here again, 5, 6. All right, and then you are having 7. Total was 8 here. I think I missed out something. 1, 2, 3, 4. From here to here, 5, 6, 7. Yes, 7, and the last one, 8. Like that, you have got the 8 price changes also. Plus is 11, minus is 8. Then you have to go and find out the mean, the average, using this formula 2n1 n2 divided by n1 plus n2. You get the average as 10.26. You find out the standard deviation, which turns out to be 2.06. So which means your actual price will be either plus 2.06 or minus 2.06. After you took that, we found out using this Z value formula, x minus x bar divided by standard deviation. With that formula, we go and work out and we find out the upper limit and the lower limit. Okay. I'm not working out the whole question now due to shortage of time, but this is how the whole problem we have already done in class. This is not something which is left out. Okay. Yes. Yes, friends. Any other doubts you are having in this or any other areas you want me to cover? All right, friends. So I'm not taking much of your time. You have my number. You can message me anytime you have any doubts or anything. All right. My only request to you, keep your mind focused and stable. Very, very crucial. SFM is not the only paper you're talking about. After SFM, you have audit, law. It's consistency which will help you to win. Get some good sleep. Work out properly. Whenever you are feeling low or something, talk to your friends. If you want, you can message me also. Absolutely no issues. But make sure you keep your mind strong. Have good food, study consistently, and just go to the examination hall with a cool mind. You are already 90% prepared. It's only the balance 10% that you will definitely do it in the examination hall. And friends, try starting with the theory. Then go to the problematic areas. So that what happens is, first 30 minutes, you write 16 marks of theory. If it is in the correct order, you will score 12 marks. That will give you a lot of advantage because 40 is the pass mark. You already got 12. Only 28 remaining to pass. That psychological advantage is very, very crucial, friends. All right. So I'm not taking much of your time. Go give it your best and finally finish these exams and then live your life your style. All the very best, friends. Do well. Take care. Thank you so much.
Thank you, sir.
Thank you, and thank you, Mr.
Thank you, sir.
Study well. Take care.
Thank you.
Sir, that SEMP, your YouTube channel, it is not showing.
It's not showing what?
The SEMP full marathon revision course.
It is there in my app. I'm unable. It's there in my app. I'm unable to download that. That's why it's not there in YouTube. Maybe I'll sit and arrange all those videos now. That's my next task. Now, when you are writing exams, I will be arranging all the videos. All right. So just be in touch. I will set up everything in YouTube very soon. Okay.
I covered SFM through YouTube only, sir. Exclusively now.
And it's easier in YouTube, but too many videos are there now. I need to just filter it out and upload everything in YouTube. I'll do that. Next coming 1 week's time, I'll arrange all my videos in one place and I will take care of that. Okay. All right.
Thank you, sir.
Thank you so much. Study well. Take care. All the best.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir. All the best, guys, for the remaining exams.
Ashish, how is your exam?
Yeah, reasonably good.
Okay, everybody is by heart that word actually.